Hello and welcome to Mortgage Watch. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego, and this is financial and mortgage news that you can use. Well, this week's news is really not great, and it's kind of like watching a horror movie. You know, when you watch a horror movie or a real thriller, the villain or the monster never really dies. You think he's gone. Just when we're kind of relaxing, you grab somebody's ankle, or she, or whoever the villain is, or what it is, and you realize that it's going to go on for a while longer. This, unfortunately, is the state of our economy and the housing market. The good news is that oil is coming down, and as we predicted for a while, there is an oil bubble. There's just a lot of speculation in that market, and as that begins to calm down, that's going to help the stock market and then the bond market. But the real news for the bond market is the continuing turmoil about how we're going to solve this problem. As we've been saying for several weeks, the government just does not want to get involved to the level that they really will need to. There's only one hero or heroine that can solve this thing, and it's the federal government. It's way too big for small agencies or small groups or states or anyone else to solve. It's going to take the intention and resolve of the federal government in a way that they really haven't done yet. We do have a bill that's working its way through Congress. Mind you that we're coming into the second year of the housing crisis. This began last year around July, late July, right around now. So we're beginning our second year, and there yet has to be a comprehensive bill that's really made it through Congress. That gives you an idea of how long it takes to solve even a huge problem. Of course, there was a lot of denial for the first 6 or 9 months as companies were folding, people were being foreclosed upon. But now that it's beginning to reach epidemic proportions, I think federal lawmakers are starting to get a sense of what's going on. The bill that's going through Congress is far from perfect. As we've called before, for full-scale federal intervention, it is not that, but it does start to present a lot more opportunities to really help people. It's not a bailout of people who did stupid things, but it's a way of helping people who got into situations they really shouldn't have been put in, or went over their heads, or just simply can't afford the adjustments on these loans. Most people who got option arms or who got these 228 fixed subprime loans really didn't understand how they work. I mean, heck, most people in the mortgage industry don't know how they work. So how do you expect the average consumer to understand that? Interestingly enough, a study was done, and 66% of the people who were in subprime 2-year fixed loans that then adjust, sometimes by 4 and 5%, are actually A-paper borrowers. So the thought was, well, it's mainly minorities, it's mainly people who don't know, it's mainly people with poor credit. Not proven out so far. It was all part of the rush to get in and, you know, get more than you can afford. And that was part of the problem. Anyway, right now we're looking at solutions for trying to fix this thing. The manager of the PIMCO bond fund, Bill Gross, who's a very, very famous bond trader, he thinks there's going to be $1 trillion in write-downs. So that's huge. We're about halfway there. The good news in other places is that the housing market is starting to solidify, and even with all the problems, values have come down so far that a lot of people are able to qualify full doc. We see that here in San Diego. There are now multiple offers on a lot of properties, and there's a lot more activity than there has been in a long, long time. It's far from perfect. Housing prices have yet to start a climb upward, but they are solidifying. And when you have multiple people putting in offers on property, then that's a really good sign. And it's a sign that a lot of people can afford things. The affordability index has come down, meaning that a lot more people can afford homes, and that's really, really good news. We're kind of at a place where we are starting to see the positive results of that. Other things that are going on is more bad news, of course, being broadcast by Wachovia and Washington Mutual. I personally don't think that Washington Mutual is going to last. They're going to be taken over by someone. Hopefully it'll be sold before the feds have to step in. They have a huge number of troubled loans, a huge number. And so there is a lot of money around that's waiting to come in and buy these companies or take positions in them. The shareholders of these companies are going to see a huge dilution of their value, but that is part of how the system works. The people who own shares in those companies took the risk of them going up or down. At this point, they're probably still headed downward, and that's just kind of how it works. Countrywide is starting to be sued by more entities, and in fact, San Diego joined a growing list of cities that are suing to prevent continued foreclosures in San Diego. It joined cities like Cleveland, Buffalo, a couple of other cities in the Midwest. that are starting to actually ban or sue lenders from following through on foreclosures until they've tried to work things out. Of course, this is the purpose of the industry's Hope Now Alliance, which is to work things out, but a lot of that is really PR and not really having effect. I think once the cities step in and then the federal government, we're going to have more concrete action. I just want to remind everyone, I know there's people who keep saying, well, it's a bailout, it's helping people who made mistakes or shouldn't have done these things. It's a nationwide epidemic, and sitting around and watching that someone may benefit who made a mistake, who should be punished, is really fruitless at this point. We just got to really get things fixed. I keep going back to what happened during the 1930s. There was a huge depression. 1 out of 3 homes in the country was in foreclosure. The government created a federal administration to take care of that called the Home Loan Corporation. That corporation followed through, did foreclose on people, but also helped a huge number of people. And 12 years later, or 13 years later, it was dissolved with a profit to the federal government. So it made money in its endeavor. But once you have the full faith and backing of the U.S. government, it's a different ball field. And again, the U.S. government and the U.S. economy is huge. It dwarfs anything else in the world, and there's enough assets there and everything else to see this thing through. We're starting to see the first step of it. Hopefully the Senate's going to pass this bill that's on the table right now. It's not as much as we think should be done, but it's going a long ways to solving the problem. Mortgage rates have gone up in the past few weeks because of all the uncertainty around the market. Once oil continues its downward price trend, and we see that the government's going to step in and start to solve some of these problems, I believe that interest rates are going to solidify, they're going to stabilize, and they're going to start to work their way down in coming weeks, because all this good news about oil dropping is actually going to be very good for bond prices in the long term. So we have that going on, we have housing prices stabilizing, there is good news, and there is that silver lining in the clouds that we're looking for. So hold the course, be careful for what you do financially, live within your means, and again, if you're considering buying a house, it is a fantastic time to go out and see what's available in your area where you're looking to buy. There are some great deals out there, and with the new government programs coming out, there's going to be more help for people to refinance and also to buy these new homes. With that, I want to wish you a great week. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego. Visit us online at our website, unitrust.us. Thank you very much, and look forward to seeing you next week. Bye.